Hello, this is Dr. T here. I'm going to share with you, right, why stock market and economy, right, is moving in the different direction, right, during the COVID-19, right, pandemic. Basically, people understand many people losing their job, right? The economy is very bearish, but how come the stock market rebound strongly? So that's why in this video here, I'm going to share with you, right, how these two important indicators, the stock prices or index and the macroeconomy, right, how they are related to one another. Okay, so and of course including the analysis on the COVID-19, right? Okay, without further ado, we can start from here. The update, is done today, right? But many of the principle is still valid and useful even at later time. Okay, let's learn together. But before that, a quick introduction of Dr. T, right? I have a PhD, right, focusing on computational simulation. That's why when I see the stock prices up down, the COVID-19 cases up down, right, the economy up and down, right, I'm actually fascinated by the changes. Okay, I have over 20 years of experience, especially in the stock market, and I'm actually the inventor of the 55 investing styles, right? Which usually I teach over a 6-day class and also a 7 hours online course. Okay, today you'll learn actually from this full roughly 1 hour of video course over here. Of course, if you have an interest, you can actually learn further, right, from the online course over here, or you can read, my past over 1,000 articles, right, in the ein55.com, right, /blog. Okay, in that case, without further ado, right, let's start from here. In future, you'll get to know me better. Why Dr. T, your nickname is called EIN55. Okay, but not the focus of today. Okay, today, right, I'm going to share a lot with you, but all from educational, right, purpose. So you still need to make your own decision, whether it's for the stock or for this so-called the coronavirus, right, prevention and so on. Okay, so let's move on from here. Dr. T, how come these two are moving in different direction? Right? Yes, in this course over here, I'm going to share with you my view on that. But before that, you must understand it's a competition between greed and fear. Right? The greed actually is led by our Trump over here. Right? So he's going to pump in unlimited QE or quantitative easing to fight against this fearful coronavirus, okay, and which is causing the world economy right now become weaker and weaker, especially during the lockdown period. So when the people stay at home, basically, right, they cannot do shopping, right, and those F&B, right, will be in trouble, and then those transportation company, including airlines, is likely, will suffer tremendously. Whether can survive is still a question mark. Okay, so in short, all consumer related sectors, as long as you need people, right, that in the last few months definitely affected. Okay, and exactly because of that, right, the stock market fall down tremendously over the last few months. However, right, in the last 1 2 months, it start to recover or rebound. Is that a technical rebound? Will it fall down to a deeper, right? This is the bottom. So all this we will address, today. All right. But before that, let's understand the opponent, right? It means the bearish economy caused by the COVID-19. Let's take a look, right? There are three important macroeconomy indicators we're going to learn today. Number one is on the GDP growth rate, right? So GDP is a very important indicator for macroeconomy. So usually we want to look for a positive number in terms of percentage change. So these are the every quarter, right? It goes up and down. So we compare US and Singapore, right, in this chart, and then China versus Europe over here. So we look at very long term. Let's say in the last 25 years, from 1995 until 2020. So over the last 25 years, you see, USA, you look at the blue line, which is the left scale, and then Singapore, read the right-hand side axis, which is the black color line over here. So we focus on USA first. USA, the GDP fluctuating from plus minus 4% in the last 25 years. Right now is around close around 0.3%, all right, which is like at the middle of this two extreme. So in fact, it's quite aligned to the stock market as well for this long-term indicator because US right now also at the moderate level for the stock market. So therefore, in fact, this is not yet the worst. Okay, when we're talking at least coming to maybe like minus 4%, then that is something, huh? So 0.3 not yet, but because the GDP is reported every quarter, so it'll take some time lah, huh? Okay, so at the moment, we treat that as a long-term indicator. So therefore, it's like a big ship, gradually move down. So likely the quarter two may go down even further, right? So in that time, we will see a better, right, reflection of the U.S. economy especially, right? But Singapore, right, at the moment is already considered one of the lowest, right, based on the history. Historically, Singapore vary from minus 10% to plus 20. So therefore, minus 2.2, right, for this quarter, right, quarter one in 2020 is already considered a low level, or you can even call it like a low optimism of the economy for Singapore. And that's comparable with the low optimism, right, in the stock market for Singapore. So that's why for the long-term GDP, there's no surprise, but you need to compare long-term versus long-term. Okay, yeah, you cannot compare a V-shaped recovery for 1 2 months in the stock market with this long-term here. It's not comparable, right? Due to the time scale difference. Okay, at the same time, China fall down, right, to the lowest ever. Okay, because China, okay, whether you trust the data or not, okay, this is something we have to accept. Okay, oh, by the way, there's a typo here. All right, this would be China, not the US. Okay, look at the blue line, right, the China, right, dropped to minus 6.8%. And you see in the last 25 years, the lowest ever was probably 6%. And then Wendy in the last few years, it touching like near to 6%. So never ever go to the negative territory, huh? Okay, so therefore, this is a minus 6.8. This is really tremendous low for China. Okay, but because of China, the worst case for the COVID-19 is kind of over. So in fact, the economy has restarted already, right? Even from this March onwards. So therefore, the Q2 likely to pick up. Okay, so we kind of foresee there will be a V-shaped recovery for the China, right? This GDP, huh? We'll see on that. But the Europe or the EU, European Union, right, go to minus 2.7, which historically fluctuating from plus 4 to minus 6. So this is in a way quite similar to Singapore, right? One of the low level, but not yet very low, right? Not historical low, right? But in fact, Europe later on, I'll show you the COVID-19 condition, right? Is likely will end or fade away soon. So it means right now, Europe countries, right, even those like UK may not be ready, right, cannot wait to restart the economy. Why? Because unfortunately, between bread and butter and the life, sometimes there's a balance in between. Right? Because the lockdown could save the life, but some poorer families, right, under financial burden. In fact, to them it's even more scary. So that's why political leaders have no choice but have to, strike a balance between two. So the standard right now is the whole world, right? I think average lockdown is probably around 2 months. Some a bit kiasu, maybe lockdown longer. Some maybe shorter. Huh? It depends. Okay, so in general conclusion, based on this long-term indicator on GDP quarterly changes, in fact, there's a correlation to the stock market in the long term as well. Long term versus long term. Huh? Later, I'll show you the stock market. Right? But because the GDP is moving slowly, so we may not see the true low yet at the moment. probably China already the so-called true low, but we need this quarter two to confirm the rebound. But USA, right, and the Singapore, I think they'll and could be Europe, there could be more downside. But Europe also hard to say, huh? Europe is like slightly actually ahead of US, so it might be improving. So we don't need to guess, but we can say that the US economy actually is still not that bad, but with the quarter two, right? Because most of the lockdown is during the quarter two for this US, right? April and May. So in that case, and even possible to extend to June, right? Depends on the states. There are 50 states. Not all listen to Trump, right? They have the right to make decision based on the individual state, right? But assuming quarter two could be the worst, that's why Trump say quarter three, quarter four were getting better. You see this deep valley but wide valley here. Usually for a true global financial crisis like 28, 29 over here, it will take roughly 2 years to rebound. Okay, 1 year to fall down, 1 year to recover. But the COVID-19 is like some sort of like a heart attack to not a company. Yes, to both a company and also to a country. Okay, because people cannot move, almost like a heart attack, right? So the money is stopped. So I would say even this, yes, could drop to as low as here or even more possible. However, right, this period duration, right, could be shorter, right, due to the fact that the easy fall down, easy recover, huh? Especially with a Trump unlimited QE and the whole world government, right, definitely they will do their best as well. All right, important is the sentiment, right, which stock market is leading the way right now. Okay, Doctor, how about the second important macroeconomic indicator? That would be unemployment rate. And this is the bread and butter, right? No job, no money, no salary. No salary cannot do shopping. No shopping, business will fall down. So this is actually a cycle thing, huh? Yeah, so that's why unemployment rate is usually one important consideration for the Fed. Okay, Federal Reserve will look at it. However, look at the last not 25 years. Look at from probably 1950 until here, last 70 years. Last 70 years, the worst is around like 10% unemployment rate. Right now, within just 1 month, shoot up to 14.7. This I call a heart attack lah. Right? In April alone, because April lockdown, okay, and in fact based on the projection, May some say could even worse, go up to even all the way to 20+% possible. Yeah, because this is April and May is a lockdown, right? Although the economy could restart, from this May or in June, right? So therefore, the US unemployment rate is reflecting of the midterm. Okay, there's no such thing as short-term economy lah. So we will say long-term and the midterm. Midterm is because it's reported monthly. Huh? March, April, right? March was still okay, but then April, right, suddenly worse, right? And then May likely will be one of the worst, okay? And maybe in the history of a whole world, who knows, one day after 100 years, right, those who study history of finance, then they say, oh, you see year 2020 something happened, our country, shoot up to the highest in the 1 century. But that with assumption COVID-19 will not come back again in another form, huh? Yeah, so that's why, but that um, regardless what happened in future, this incident may not be the only one, but that actually provide an experience, right, to the people from now on. Yeah, even Warren Buffett does not know what to do, right? So he sell all the airline stocks because he's afraid. What if the whole world, the next 1 year, cannot move around? Then all those, the so-called the shares with the airlines, all those, become junk paper possible because they may all go bankrupt. Yeah, so it's nothing wrong from Warren Buffett to make that decision, right? But remember, you are different from Warren Buffett. Your personality is unique. So later I'll show you, each of us, we have to make our own decision, not to follow others. Okay, right? We continue. How about Singapore, Dr. T? Singapore, the worst was the 1980s. Okay, at that time, In fact, it could be even higher, but because our data only available until here, that time was around 6%, right, unemployment rate. Right now, 2.4 still nothing. Okay, why? Because government support the job. Don't worry, partial, this salary payment. Yeah, so having a good government to support, right? Not only for 1 month, for the next 3 months, 6 months, 9 months, because the job is the bread and butter, important for people. Huh? Yeah, although GDP could fall down, but for Singapore, is unique, right? The job market actually is quite strong. But with the because Singapore, by the way, is reporting as a quarterly, so this 2.4 may not be a true reflection because January, February, people can still work even up to March. So therefore, I'll say Q2, right? Then there could be significant surge over here, right? So unlike other country, there's a monthly reporting over here. Then is closer to midterm. Singapore, because of that quarterly, then you can use other country as a reference. Huh? All right. So China shoot up to 5.9%. But to be fair, I want you to zoom into here. In fact, it was over 6% because China, in terms of COVID-19, is ahead of others. The worst was not in March. The worst was in February, right? In fact, now dropping, which is a good news. Unemployment rate we want low. When it's high means people don't have job, right? So therefore, usually bear market correspond to high unemployment rate. Okay, you see the drop here, although I won't say significant drop, but at least a 10% drop, or nearly like 5%, dropping from here to here. Okay, and with the economy restart right now, right, people start to go out, not only China, right, also in this Hong Kong, right. So therefore, right, it's very important for us to use China as a leading indicator, right, because China, right, start and end first for the COVID-19 condition, and later on followed by Europe, followed by US, and later on Singapore. So you can see that as a connection, right? The reason the pattern will be similar, right, from country to country, because the COVID-19 affect the whole world in a similar way, causing them cannot move around, causing the business to, suddenly, right, cannot function. Okay, we look at Europe, right? Europe could be Italy, UK, and so on, right? We just in general group them together, right? In March, 7.4%. Right? Actually, not yet. This is not so-called the worst. Okay, I believe Eurozone, they also have the, government support, right? So in fact, this is relatively low, right? Not, as high as over here, but the next month, we could see more impact, yeah? Because of again the lockdown. But I'll say even compare, let's say with like US over here. Oh, now I think I probably can understand why already, because we have not seen the April data because it depends on the database. Huh? Yeah. So once we have the April, right, for Europe and China, that will be even clearer because US usually report very on time. Okay, so the information is available to the whole world, right, investor. Okay, so in fact, this comparison may not be at the same time frame. This is US study 1 month ahead of China and the Eurozone. Huh? Yeah, so therefore, right, in fact, for China, we expect maybe, right, let's say we know the April data. I've searched for it, but I've not able to see the China Europe data. Right, assuming we could get it within the next 1 or 2 weeks, right, this likely will fall down. This likely will shoot up. Is all right? Okay, and Singapore, we probably need to wait for a few more months or wait for governments, how much they can disclose. Even you no need to actually predict all this, right? Um, for sure there'll be a certain extent, or you'll be affected because you can just observe your friends around you, right? How many people actually are affected. There's a certain high percentage. In general, Singapore has a low unemployment rate, but this is will be relatively high even among the low. Okay, but because unemployment rate is something the government to a certain extent can help. Okay, they can actually pay for the partial salary and so on. but because US has too many people, 300 million people. So that's why it's difficult for US to support, each of the American. But for a smaller country like Singapore, right, that part I would say relatively is stronger, right? So that's why we cannot just look at one indicator itself. Okay, Tofi, how about the last one? Last one is also a midterm. It's called the manufacturing PMI, Purchasing Manager Index. Usually we look at the number of 50. If PMI less than 50, right, then it's actually this reducing, so shrinking. And if it's more than 50, then it's expanding. Is all right. So in short, during pandemic, or actually shrinking. Okay. Of course, I mean, if manufacturing cannot operate, right, how the purchasing manager is going to increase, the purchase for the next few months, right? Difficult. But you look at here, China fall down to around 40, and then quickly the next month, from March, within 1 month, rebound to 50 back. So this show, this is China. We call it a nickname World Factory. So that's why PMI, especially for manufacturing, important for China. Okay, yeah. So this is actually a good news, because just now, based on the GDP and the unemployment rate, we probably see a little bit recovery here, not significant, but PMI, this is very strong. This one, even you can call it a short-term economy, you want to call it. Yeah, because we restart economy, then this one will shoot up. Same thing for Singapore, right? Now low, right? So if right now April and May, likely May could be even worse, okay? Because more actually unrelated business not allowed to operate. But one day when you look at June, will likely will shoot up. Yeah, because this is COVID-19 driven. Important, don't let the COVID-19, the virus, right, causing the short-term or mid-term or this depression become a long-term depression. Means causing this valley to be widened from 6 months widened to 2 years. Then unfortunately that 2 years could become 5 years, then become the 1929, the Great Depression, which a lot of people frightening, right? Although some people using the 14.7% here to compare the worst ever unemployment rate since 1929 Great Depression, I'll say that comparison may not be fair. The reason is the 1929 Great Depression is not over 1 month shoot up, right? You can go and dig out. It will take at least a few months or even 1 year to reach that high number. Okay, it's economy, right? There's a reason why the 1929 the Great Depression was caused. Okay, not due to the virus. Okay, by the way, the Spanish flu, that one is even longer at the time, even before that. Okay, anyway, we back to our business over here. All right, so I'm trying to say is US right now want to restart economy. So April right now, bad. Likely May will be even worse for both unemployment rate and PMI. Okay. However, right, if you can wait for one more month, right, let's say looking at June, later I'll show you the COVID-19 condition in the whole world. In fact, US, you can see clearer light at the end of the tunnel, right? So I think summer got hope it may fade away if it's not ending, for the COVID-19, So it means even all this fall down, right? There's a high likely could have a V-shaped recovery, unlike this kind of widening right over here. Important is don't let the short term or mid term or this PMI unemployment rate causing the GDP become a long-term depression. So that's why the unlimited QE or this are important. Okay, it means one company go bankrupt, the government will quickly, this support those junk bond, you know, uh, default. Then the government will quickly take over, right? Will not allow same thing like the 2008, 2009 subprime crisis, to get worse. Okay, means before it go down even further, try to stop all these medium term, right? This economic indicators. When people got job, when they can get back the job, then they can spend money. So don't let this mid-term job loss become a long-term job loss. Okay, yeah. So therefore, in the next 1-2 months will be crucial, and that all depends on whether COVID-19 could end, right? During the summer. All right. So we'll see, huh? with a hotter temperature plus it started earlier. I think all this has a high chance, but we cannot assume, right? So stock market is forward looking, so we have to make a decision even we don't see a few months from now. Later on we come to the stock market. Okay, by the way, PMI got two types. One is called service, all right, PMI. One is the manufacturing. Singapore, in fact, the service PMI I didn't show here, it dropped even to around 30 plus. Okay, very bad. Because those servicing sectors, right, like retail, all those are not manufacturing. But in April or May, people cannot, buy things. So definitely it suffer more. But manufacturing is the backbone for Singapore. And in fact, those like semiconductor, factory can still operate even during the circuit breaker. Yeah, therefore, this may not be as bad as some people may think, right? So because there's some, special arrangement for different businesses. So in short, manufacturing is still all right, but because we want to compare apple to apple, so I'm using just that. But one observation, right? All the country during pandemic definitely fall down, but China take the lead with V-shaped recovery. This is so far the only one V-shaped recovery indicator on PMI. Okay, so if unemployment rate for China, assuming once we got the reported the April data, if this one fall down, by the way, unemployment rate is the reverse. When this one fall down, it's called V-shape as well, kind of recovery, because it means when the number become lower is good, and this number going higher is good, yeah. So in fact, right now close to about normal already. Yeah, so with the restart of the economy, right now you see Disneyland in the Shanghai, people can go Disney already, right? Within minutes, the tickets are sold out. The suppression of demand. Okay, except now they cannot travel, Yeah, whichever they can do within the law, right? They suppressed for 2 months already. Now they want to revenge, Yeah, so that's why revenge shoppers, right? Once the threat are removed, same thing for Hong Kong side, same thing for the South Korea, but unfortunately, you heard the news, South Korea and maybe even Hong Kong, we have some reported, possible rebound of cases, but unlikely to be as worse as last time. So again, local government has to balance between, right, the bread and butter, the economy versus the coronavirus. Yeah, but right now with more awareness, right, by people, social distancing and so on, I believe even it's not zero cases, right, those are manageable. Okay, because virus, by the way, there's a so-called number called R naught. R naught is the so-called transmission factor. So when we have a social distancing and all that, the R naught when it's less than 1, you'll die naturally, like last time the SARS period. Okay, SARS actually fade away in 8 months during the so-called even I think it's around summertime, after the 8 months. So that's why this round we cannot be hopeful it will be the same. But important is must be multiple channels. Okay, vaccine still not ready yet. Vaccine will take another 1 year from now. Okay, but at the moment I'll say uh, people must be aware of how to actually keep a distance from one another. That would definitely help. Yeah, so you see last time some people may not want to wear masks like in Europe, in US, right? Now even Singapore also, like, it's a compulsory to wear masks. So this is important, right? It changed the habit of people. So that's why right now it's hopeful, right? The virus, right, would have good chance to end. But before we look at COVID-19, let's look at the stock market. So these are the triangle: economy, stock, and COVID-19. Right, because COVID-19, right, is the causing, right, stock and economy to have this unbalance right now. You see, in my last month of this online course, I reported, right, there's a V-shaped recovery over here, right? The daily price cut above the 20 days moving average. So there was something. You see the blue line cut above the red line. However, right, something is changing here, right? Because in the last 2 months, right, we have been having a V-shaped recovery. Looks like it come to some so-called junction, right? So some people worry what may happen. Firstly, the US side, the short term, there's a touching here, means the short term, the daily price is below the 20 days, but just for the 1 day. At the moment I'm taking the video, right, US was down half day, and then it rebound again, become bullish for half a day. So this is called short-term trader, right? 1 day you buy, 1 day you sell, right? Can you take it? Huh? Yeah, so that's why those days trader, right, may not be suitable for some of you, right? Because you cannot take it. Dr. T, very stressful. Today sell, tomorrow buy, or today buy, tomorrow sell. Yes. So therefore, usually as a short-term trader, right, you should even give yourself, at least like a few weeks, right, to see the trend. Don't just look at 1 day. But here we are not looking at just 1 day, right? If you even look at weeks, there's some of the clearer signal. Yes, it means this round rally, there's a possibility may have some correction, although it may not correct all the way down, right? No one would know, okay? Because the stock market is actually forward looking. Why it did not fall down further? Because they see light at the tunnel. You see the hope, right? The US got unlimited QE. The hope of economy could restart in 1 month time from now. Usually, stock market is like 3 months ahead of economy. Okay, yeah. So therefore, so this is not really something surprise. Why stock, right, could rebound earlier than economy. However, if the COVID-19 could not be stopped, right, continue for the next 3 months, 6 months, 9 months to affect the whole world, even restart economy have to lock down one more time, guess what? Right, no surprise, right? All this will fall down again. So at the moment, this junction, we have to analyzing the COVID-19 later on. So it means if you are a short-term trader, it's nothing wrong for you to get out, right? Because now forming some kind of mini double top over here, right? For example, it may break below like 2,800 points for S&P, right? So S&P, if it's above 2008 or the best is above 3,000 points, then the bull run will continue. But Dr. T, if I sell later on the next day, go up, how? In that case, you could actually buy when it's more bullish. Because as a short-term trader, you not no need to buy the lowest. In fact, you could buy high, sell higher, wait for a breakout. For example, you wait for a breakout of here before you buy again, right? If right now it's really bother you. But if you're a medium-term trader, you may not need to get out. You see, the red line, the 20 days already crossing the 50 days. Right? In fact, the medium term, right, you can still hold, right, based on the personality. So that's why you need to decide your personality. Are you a short-term trader, medium-term trader, or long-term investor? That will decide of your actions: buy, hold, sell, wait, or shorting. Is that okay? And in fact, the last low was the 23rd of March over here, right? So the S&P was around 2,200 plus points. Whether it will fall down to here, no need to guess. Because you're guessing, Dr. Don't worry, I let it fall down to here, only I buy. Yes, you can assume that. But what if never fall down? Are you okay to miss a boat? Yeah, so this is something you need to think about it. Yeah, no one could predict the future. So that's why you need to have a strategy. So later I'll give you a bonus, a strategy for the stock crisis. Whether it go up or go down, you will not miss a boat, right? And you can minimize your risk using this strategy alone. Okay, we continue on the Singapore. All right, Singapore, you can see that same kind of a trend, go to a low on the 23rd of March. Also V-shaped recovery. Also the daily price above the 20 days. However, right, there's a correction going on, right? If based on today, lah, huh? Again, it could fall down. Then next day, who knows? It can go up again. So don't, put in too much emphasis on that. But just reported to you, if you are a short-term trader, follow rules. Yes, there's at least a first signal. In fact, it was a signal here cutting as well, right? If you see here, the blue line below the red line for 1-2 days rebound again. All right, again, all right, yesterday and today, all right, is actually coming down to here again, huh? I'm not surprised it could go up again, but as a short-term trader, this is the stresses you are experiencing. Okay, yeah, so that's why some of you may not be suitable as a short-term trader. Right, every few weeks, 2-3 weeks have to buy sell one time. Not to mention those like day trader every 1 2 days or even within the day they have to take action. Extremely stressful. And in fact, the chances of success may not be high for those day trader. Sometimes you could have even gap up, gap down, 5%. Can you take it? Even you have a cut loss, also difficult. Yeah. Okay. Anyway, good news. The red line, which is 20 days, going to cut the 50 days. The reason medium term is lagging. Okay. Even here falling down, right? As long as it could actually stay roughly within this range here, around like 2005 or even 2004, right? This medium term crossing is going to happen, yeah. So moving average is a so-called technique, but it's a lagging indicator. Okay, it removing all those whipsaw, the noises, right? This is the strength of it, but it's also the weakness. Okay, so therefore each of you have to actually looking at different pairs of the moving average, right, to make a decision of buy or sell, right, using this simple technique. How about for Hong Kong? Hong Kong, in fact, relatively stronger than just now US and Singapore, right? Because both the short term and the mid term actually are crossing each other. Yeah. So although the short term, like today, right? Because when I report this chart, today is already too late already. But who knows, tomorrow may go up. Today, in fact, is crossing down. Okay. But the midterm is actually up. Okay. Yeah. So the trend for Hong Kong and the China are quite similar. Hong Kong, both short term, midterm is up. In fact, Hong Kong and China right now, the COVID-19 condition okay already. People can go out. Even some don't wear masks anymore. Okay, at least like around 80-90% normal life already. Yeah. So therefore, their sentiment is much more optimistic. So therefore, the stock prices is a reflection of that as well. So just remember, right? Sometimes when you may not know what may happen in future, stock market may give you some clue. But remember the day to day, those could be noises. Why? For example, like today, this US, right, up down here, not only on COVID-19, right? That could be the possible, starting again the trade war between US and China. Yeah, because there's no ending. Like you thought episode 1, 2, 3, no more. Got episode 3, 4, 5 may be coming soon. Yeah, so all those are beyond prediction. Can you guess what is in the mind of a Trump? You cannot. Okay, do you know what will be the reaction of China? You don't know. So that's why for us, we have to see all this from a probably slightly longer perspective. Don't just every day up, down. I think today bullish, I think today bearish is meaningless. So when you read the analyst report, sometimes you type, wow, stock market news. I can tell you, 100 people today if bullish, then they will say, oh, something good is happening. If today bearish, then they will say something, another version of story to tell you. Okay, don't do that. Okay, at the end, this is your hard-earned money for investment. So you have to listen to yourself. Don't just every day read the analyst report. Okay, because at the end, they will find a story to so-called satisfy your need. Why you search for the news? Dr. T, because I want to be, because I'm long, so I want to hear some news supporting my view. Or Dr. T, because I'm waiting for it to fall down, so I want to hear more bad news. You see? So this is called biases. Okay? So don't do that, right? Instead, later I'll show you, know your personality first. Then align your strategy to your personality. Don't listen to other analysts. So my teaching usually, right, I'm sharing at least 3 different personalities, short term, mid term, or long term. Yeah. So one person, for example, short term selling, nothing wrong. Because long term could be buying, also nothing wrong. Means within the same time, one person could be selling, another person is actually buying. Actually, both are correct because both are aligning to their personalities, okay, which are different. So next time, do not argue with one another. Say, no, 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 now market is bearish. You buy now, you die already. You fall down. No, no, no. Now the market actually, is bullish. Definitely will go up. Everyone say will go to a new low. The worst was the March 23rd. You will not fall down again because stock market is always forward looking one. I think COVID-19 will end definitely. Again, no one knows. All this is called probability, but you cannot take 100% risk. You cannot put all your money, say, oh, I bet on it. If I lose everything. You cannot do that. So later I'll show you. You need a few ways to protect you. Those are your defense system. Okay, we continue, right, on the rest, right. So now we move on to understand what's happening between stock and economy. It's a relationship same as the man walk the dog. Okay, the dog is actually the stock market. Sometimes could be ahead or behind the master. Master always, got this a leash or the string holding the dog. It cannot go too far. So sometimes could be bullish or bearish, but it will not go too far away. So that's why just now when we look at the long term of the GDP, for the stock and economy, actually align quite well. But those medium term like unemployment rate or PMI, then the one fluctuate a bit lah. Right. So therefore, the stock market, especially the daily one, are sometimes cut below, sometimes cut above. You look at those daily prices. So that's why the dog could be very hyperactive, right, during the daytime. So don't just today guess, hey, how come the dog today never bark? Huh? Is there something wrong? Is my dog is sick today? Don't guess. Right? You consult 100 so-called doctor analysts, and guess what? Okay, at the end, no one can tell you what happened because this is the reason. The master accidentally stepped on the COVID-19, right? Sleep for 1-2 months, so must be under quarantine. Okay, lockdown. But the little dog did not know, right? The little dog actually thinking maybe the master will get well after 2 months, right? Probably summertime can go out again. So that's why the dog say insist must go forward. So that's why got visual recovery. But the master say I'm too weak. I cannot take you out. So still dragging on it. So right now stock drag. So it must wait until the master recover first. How the master recover? Firstly, right, the condition, the cases, later I will show you, right, the global cases to see when the master will recover. So that's why whether you study the stock or whether you study economy, in fact, both may not be right. You should study the COVID-19. At the same time, you must have a defense system which can take care of all the three together. Okay, later I'll show you that strategy. Okay, this is the COVID-19 condition, right? In fact, Doty was one of the earliest to start the analysis. As early as February time, already plot all this. Right. In fact, at the time, even before China condition, you know, reached a peak in the roughly early February. I already wrote this article say by end of February, China will reach, so-called is the worst condition. Later on will fade away. So this is called so-called 4 months model. Okay, and this is not hindsight. It's not like after I know China case, then I write back all this model. No. Okay, this is forward looking, but you need minimum data. Same as a stock economy. Right, you cannot from here one project 2, 3, 4, 5. Impossible. So at time I use 1 and 2 to project 3, 4, and 5, and then along the way fine tune it. Okay, so I'm going to apply this so-called 5 points model over 4 months, right? Using the China. This China already completed already from January to April, so people can continue party already. Okay, followed by Korea. So Korea in terms of 1, 2, 3, 4, you see this is a point. P4 and P5 is already, you can say crisis over already. Even there are random cases. Korea between 3 and 4, but cannot help to start the party first, and recently got some reported cases. So I think still need to a bit more patient wait until end of May. And then followed by this Europe. Europe was starting roughly February time, and likely will end in the end of May So those like Spain, Italy, UK, are actually improving a lot. Right now, I think the worst probably is the UK lah. UK is not as strong as not as good condition as Spain, but still cannot have one to restart economy as well. So this is just in general. I will say the trend for Europe side. Likely will fade away by end of May. Not likely lah. You can see the trend already. Usually you need minimum 7 days. These are the daily new cases. We want to see the reversal here. But all these reversal, you see, coming down 2-3 days can go up to 3 days. So we need minimum 7 days. This is already 2 months down. This is already 3 months down. This is already probably 2 months down. Okay. Yeah. So what happened to our leader? This is number 1, 2, 3. All right. Highest cases. Okay. Our number 1 is USA. What happening? Go to the high, right? And this is a good news. Wow, finally Trump so happy, you see. Same as technical analysis. We see a lower high. 1, 2, 3, 4. Hey, not 2 times. This is 4 times. If you study technical analysis, you know this is something important. Okay. So if you see like 1 or 2, maybe still can come back. 1, 2, 3, 4 is strong. However, the bad news is this slope, right, not so sharp. You'll take some time. So if you do some projection, you'll take roughly maybe June time. I won't say end totally, right? Will be similar like here, right? Or like here, right? In terms of percentage, will be much less. Okay, we're looking at probably less than 5% of the total here, right? So to consider is fading. I wouldn't say like 0 case. Even China still have cases as of today. But look at the percentage, it's almost negligible. Okay, so the whole world cannot just based on like 10 cases, 20 cases, to stop economy. Okay, so but in fact, what worry is the whole world. You add up everything, the whole world, 200 countries become the whole world here. So whole world go up, guess what? Unlike the USA fall down, it's still flat. Hey, Dr. T, USA is number 1, why it fall down? Europe fall down? How come this one never fall down? Because we got newcomers. Russia go up, Brazil go up. Hey, this is very frightening. Russia is now number 3. In fact, this trend continue, likely will take over Spain and USA. So Russia and also Brazil. Why? They don't care much more. Okay, so same as last time UK want to base on what community immunity. Say no need to do all this. Right, as long as got 67%, 2/3 population got infected, then you naturally stop already. Hey, 2/3 people infected based on the 5% death rate or fatality rate. This is tremendous. In USA, there are tens of thousands of people dying. The number of deaths is probably more than the Vietnam War, right? So this is a tremendous price to pay for that. But of course, USA has gone through that worst time already. So, but at the same time, just now I already showed to you 14.7% unemployment rate. And in fact, the next 1 month, it may shoot up more than 20%. People may not die in the COVID-19, but without food, without job, some people, I wouldn't say die, but to them, it's similar as dying, right, without a job. Yeah, so that's why, unfortunately, right, this poverty, right, this so-called no job, no money, right, is one of the important, this a crisis we need to fight. It's called financial crisis. Okay, so the whole world unfortunately have to wait for those big players like Russia, Brazil to, so similar kind of trend, right? We see some early signal, but 1, 2, 3 days fall down. This is not very so-called strong trend. Need to wait. Okay, so but the good news, Russia is not number 1 economy, probably not even number 10. So Brazil also small player. So even they are big, country. Important is the USA, number 1 economy. Number 2, China. And number 3, Japan. Japan I did not plot, but Japan not too bad. Number 4, Europe. So number 1, number 4 are coming down, and number 2 is ending already. So in fact, the whole world financially, right, I'll say this is a good trend. Okay, but Dr. T, how about our dear Singapore? Before our dear Singapore, look at our neighbor first, Malaysia. Malaysia slightly half a month ahead of us in terms of lockdown. Of course, we call it partial lockdown. We call it circuit breaker but it's the same means, alright, stay at home, don't go out So in general, we just call it lockdown Malaysia come down. There's a second rebound here, right, and then come down again. So but Malaysia very kiasu want to lock down even longer than Singapore. Singapore say until 1st of June. Malaysia say no, cannot. Malaysia must be earlier and also longer. Okay, so okay lah, I would say this is good for the people. In that case, I'll say, to me, in fact, safety is very more important. Although I must say some other Malaysian may not feel the same way because, uh, this the sacrifice is too much from the late this March until let's say mid of June, the lockdown, right? Technically, that is almost like 2.5 months of lockdown. Okay, 2.5 months, and Singapore roughly is a 2 months. Okay, and that 2 months is already a big price to pay for Singapore. But Dr. T, how can Singapore restart economy with what thousand of cases? Fearful, will we like Europe side? Okay, don't worry. There are two things you have to rest assured. Don't just look at number. Number one, these are mostly in dormitories. Okay, those are the stronger, younger, right, workers. Okay, so that's why the death rate is very low, even they got it. Of course, the workers, they are also human. We must also take care of them. This is very important. Right, but we look at the death rate. For Singapore, is the probably one of lowest in the world. Not comparable. Even we got over 20,000 infected cases, the number of death is probably like I cannot remember. Was it like 20 plus? And not comparable with the rest of the same number of infection. Right. So I would say this should be the credit, right, for the our this medical resources assistant. Right. So another important is because we actually spread from January to June. Although it take longest, but the peak actually spread out. And secondly, because of dormitories, right, we can actually contain them. So that's why so far it's still okay. In fact, the community infection cases is less than probably around less than 10 already. Yeah, so that's why probably we can understand why government think it may be we can gradually, right, restart the economy. Okay, last time gradually tighten, right now gradually, right, loosen, right, which could be a good move. So in fact, Singapore government, right, the reaction is almost like a trend trader for the stock market. Means depends on the condition. See the indicator, because we cannot tell. Right, the minister also tell you. I also don't know whether what business can restart because it depends. So same thing just earlier on we talk about the technical analysis. All depends, right? So but this at least you need to look at weekly trends. So that's why Singapore, you look at day to day, all this movement is meaningless. All right, another reason is because of the diagnosis done. Even you look at the dormitory cases, don't read too closely lah. The reason is the number of diagnosis done every day is not consistent in terms of numbers. Sometimes do a lot, sometimes do less. Okay, it's not they intentionally do that, but now they say want to actually do to all the probably 30,000 workers, and each one will do probably 2 to 3 times. Okay, I would say in general this is good. All right, but the people, right, in Singapore should not be over worried, huh? Right, but at the same time, right, we also need to take precaution, right? Don't go party again, huh? So restrict yourself. Okay, don't be too excited. You can excited about stock market, don't excited to quickly go and shopping again, huh? Okay, even those shopping malls, is open again, huh? Okay, we start from here. The general conclusion: there's a strong this so-called light in your tunnel, right? Due to the fact of the number 1, 2, 3, 4 economy, right? Due to the cases coming down with more than 1 month of trend down, not just 7 days, more than 1 month. Usually I look at least 7 days coming down. This is more than 1 month. Okay, number 2 economy, number 1 economy, number 4 economy, although Japan I never show, likely down as well. Russia, Brazil, the whole world. Unfortunately, I'm not saying they are not important. If you add up them together, not even as big as one China. Not to say compare with USA. USA, one country contribute to the whole world, half economy, half stock market. So that's why Singaporean investor must pay attention to USA for the COVID-19 cases. Yeah, even we are in Singapore, all those don't read too closely. Read here. This is more important for your stock. Okay, assuming this trend is consistent, you'll take roughly 1 more month, right, to actually to have a similar kind of trend over here for Europe or even another 1 more month or 2 months to be like same as Korea side. Huh? So there's a strong hope. I wouldn't say end as a zero case, but probably end, I wouldn't say end, fade away with probably less than 5% of the peak cases over here. It may like a bell shape, like here, like coming down, like here, drag, 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 huh? Something like that. Okay, if you want to replace this Korea, become like USA, akan datang, huh? In future. Huh? But the whole world may take, another 1 or 2 months, right, to come down. Huh? Yeah, because spreading to I did not show like Africa, like India, all right, those could be still rising, all right, you never know, huh? So that's why for the whole world to totally at the end go down, it may take even a few more months or even until end of the summer, huh? Okay, so again, no need to guess, focusing on the few key countries, which are the key financial leaders, economic leaders, okay, and combine with Singapore, okay. So right now, in the case of T, since we have all the information, how do we make a decision? Before that, now we look at the stock market first. Okay, applying Dr. T, the optimism technique for those who listen for the first time. Right, a quick introduction. Optimism is a measurement of the low and high, greed and fear, but it's not a pure technical analysis. In order to do so, you need to actually master Dr. T EN55 intrinsic value. When you know this value line, then you can plot, right, these 5 lines from 0 to 100% optimism. When it's less than 25%, you buy low. Right, between 25 and 75, you can actually hold it, and above 75, you can actually sell at the high. Okay, and then wait for correction and buy low again. Huh? So this is a so-called cycle of actions: buy, hold, sell, wait, and buy low again. Okay, so this is telling you the clock, and it's not just drawing what the technical channel 5 lines. Technically, optimism is 1/3 technical, 1/3 fundamental, 1/3 personal analysis. If you do know what is personal analysis, fundamental, technical, okay, in future, you can join Dr. T, free course. I'll guide you further. Huh? Today, there's no time for that. A quick introduction first. Okay, when other people are fearful, right, you should be greedy. When other people are greedy, right, when especially in the bullish market, you need to be fearful. As simple as that. Huh? So make sure when a giant fall down to here, you are able to take action. But also need to make sure you take care of downside. So when you buy low, it's not like lucky must can buy the lowest, and no one can buy the lowest and sell the highest. You just need to buy low enough, sell high enough. A big buy of the fish, right? From 25%, eat until 75%, good enough already. Okay, whether a short-term trader, weeks, months, medium-term trader, or long-term investor, right? All could apply this optimism strategy. So why Dr. T introduced is because I want to apply this technique to the global market. This is a whole world stock market. Right now is 51% optimism. You see the COVID-19, right, drop to low optimism. Last time Dr. T a few months ago still remind you, be careful, be careful. January is still high there. Right? You don't listen to me, guess what? You fall down to here. You see? So although future is unpredictable, but optimism is a smart method. Right? It's like a crystal ball can see the future. Same thing, right? When you see a low optimism, right now rebound to the mid optimism. Right? But at the junction, there are two possibilities. Yes, it could go up, it could fall down, but you cannot assume. Okay, so all this, as I mentioned, is not depend on here. It depends on the COVID-19 earlier mentioned. Yeah. So although we say COVID-19 has a strong this so-called likelihood may fade away for the this strong economy in summertime, but still will cause harm to the economy for those mid-term indicators. Or those long-term one, or depends on whether local government can help on time, right, before making it get worse. So that's why right now we're at the junction over here. So if we look at the USA, same thing. In January time, still high optimism, right? So you got chance, to read Dr. T ebook. I got free ebook you can download. So at the time, 6 months ago, already tell the whole world, be careful, be careful, be careful. It's not like 6 months ago, I know something will happen with COVID-19. but nearly always when stock at a high optimism, something bad is going to happen, right, in the near future. Of course, this black swan ends up is the COVID-19. But you see the difference? COVID-19 did not drag the USA to low optimism. In fact, this is a mid optimism, even if falling down like 30%. So that's why this mid optimism is quite comparable with USA, the GDP of 0%, right? Because in fact, it's not the worst yet, right? So the worst was like 28, 29. So that's why that time fall down to the very low optimism. So that's why to USA, this is just a major correction, not yet the end of the world yet. Huh? Okay, so understanding all this, now you probably understand why the US can recover so fast. But currently, it's more for the, I would say, medium-term trading. Huh? So for long-term, in fact, optimism 67%, not yet to show hands, right? But for Asia market, I am going to show you to you later on. That could be opportunity. Okay, midterm for USA is all right. Midterm means your time frame of investing is shorter. Long term is probably every 5 to 10 years you can buy low, sell high. Okay, you can use Dr. T optimism to buy low, sell high to make money from here. This could be easily like 200% upside. But for medium term, could be every few months you can buy low, sell high. Okay, and this is a very good signal of the medium term recovery. Huh? Okay, right now it's around 33%. Okay, so it means that if you're a medium term trader, right, at the moment, it's still so-called within the trading period. But if you're short term, unfortunately, short term is not suitable. All right, trend is still down. Right, just I already showed to you. All right, this is a mini double top. There's a potential trigger. Although it's sometimes one day can go down, sometimes can go up. Yeah, so this is a pain the short term trader have to endure lah. Okay, yeah, because you're actually riding the trend over here, right? You see the higher low right now. There's a divergence or over here. You see the high right now become weaker and weaker. Right? Although there's still like a bit of higher, but this is actually a divergence already, huh? Yeah, so that's why assuming it break below this neckline, right? Short-term trader, you probably need to consider your position, huh? Right? Of course, unless your medium term is different, right? If you're long term, unfortunately, you should have gone out. I mean, get out, probably like 3 months ago, right? Over here already, right? When you're crossing down, right? You definitely got time on. Even one day drop 10%, you also can exit on time because long term investor already gain over 200%. You return 10% or 20% is nothing, huh? Okay, Doctor, how about for Dear Singapore? Dear Singapore injured already. You see, every 10 years, you can apply Dr. T method. 1997 Asian financial crisis buy low. Year 2000.com sell high. Right, 203 SARS Gulf War to buy low. 207, right, sell high. 208, 209 subprime crisis buy low. 2010 or latest 2001 must get out. For the last 10 years, cannot buy stock because Singapore, unfortunately, not suitable for long-term investing. Okay, because it's too slow already. And finally, that situation changing. The last 2 months was one of the best time to buy Singapore stocks. Even as of today, 26%, I must say that. All right, even it's just 1% difference. Who knows today drop a bit, probably not back to 25% already. Yeah, so don't just, too particular on that, right? Investing is not rocket science. Must be very precise. 25% might be precise, 0% to enter, not that, right? So enough is buy low enough, sell high enough. Okay, Doctor have more than 10 strategies. Buy low, sell high is just one of them. Huh? Unfortunately, Singapore index like SCI, I'll say okay only. You buy low, sell high, you can get roughly 100% return. But to me, I'll say get 100% return. Especially you need to hold for like 5 years. Still a bit slow lah, huh? All right, you deserve something better, huh? Got chance to learn from Dr. T how to look for giant stocks, individual stock, not just on index. Okay, Dr. T, how about for medium term? Medium term, by right not yet, but why not yet? Because not even go up higher, right? But for USA midterm already, can trade already, but Singapore not yet. Yeah, because for trading we need some bullishness. This is a bullish, not strong enough. Yeah, so that's why Singapore mainly I would say is a dividend player and long-term investing position. So trading unless you go for individual stock. So look at the SCI component stock, not worth it, huh? Not to mention short term. Hi, I'm not surprised even some short term want to do shorting already. Why shorting means when the share price fall down, right? You could actually make money. Shorting you need to do reverse okay? Means looking for company losing a lot of money one. Some even want to look like airline stock. Hey, I'm not asking you to short SIA. SIA also already in bad shape already lah. Don't do further harm lah. Right, our dear Temasek and SIA, this investor do their best to help. Okay, SIA 48 years never lose money there. 48 years, almost like since independence. For the first time, right, the whole year now, just because of one quarter, become losing money. Okay, yeah, so this is a sad story of SIA. But you don't purposely also buy at what historical low of SIA. Oh, by the way, this is not investment advice. This is just for education. Okay, forget what I say, if that affect you, Oh, by the way, I've written one article on Singapore Airline. You go and search Dr. T blog lah, ein55.com/blog. Okay, I have over 1,000 articles. Right, a lot of them are written over the last 2 months. Okay, so in case this 1 hour not enough, continue to read the 1,000 articles. Okay, many of them are very timely, okay, related to current crisis. Okay, Dr. T, so much on that. But what I worry if I sell over here, later on it rebound. What if later on Trump say China is our friend again? In that case, you can still go in again. Right? It's alright one because as a short-term trader, no need to buy the lowest. In fact, for short-term trader, especially those good momentum trader, they buy high, sell highest. They may be waiting for breakout of 2006, 2007 after breakout each one, and they may not actually trade SDI, by the way. They will carefully select individual stocks. Unfortunately, likely it's a Hong Kong stocks or US stocks. Singapore very hard to find momentum stock unless you tell me momentum stock for shorting. Okay, a bit so-called sarcastic, but this is a fact. Okay, anyway, we mostly depends on local investors and traders. Yeah, but the overseas market, is much more likely, Yeah, so you can actually consider overseas, don't just whole life just trade or invest Singapore stocks. Okay, I think invest okay for Singapore stock, but probably not so much on the trading side for too many. So you need to wait longer for stronger trend, especially want to trade to long. Right now, this I won't say okay a bit bullish but not enough. Okay, we use the word not enough. Yeah. Okay, we continue. How about Hong Kong, Dr. T? Hong Kong long term very similar to Singapore. Excellent to buy as well. Optimism, in fact, Hong Kong even stronger than Singapore for many stocks. Okay, yeah, with support of China as well. Yeah, even miss optimism by 2%. You want to consider Hang Seng possible? Only question to ask: will Hong Kong go bankrupt? Will Singapore go bankrupt? Okay, or even will China go bankrupt? So if your answer is negative, in that case, you can buy the ETF. You can buy Hang Seng ETF, SDI ETF. You can buy S&P, but S&P cannot. Why? To take it back because S&P did not drop to low optimism. S&P cannot buy. Okay, but whole world, if you got world ETF, yes, you can buy. So it's a no-brainer way Whole world with 1,000 blue chip, you buy. I'm not saying you can buy over here, right? But if you can even buy it here, already good enough already. But you must got holding power Because what if the Great Depression come? Assuming go up to here, wow, fall down to here, V-shape, recovery not possible. Let's say there's a 3 years Great Depression, the whole world can still come back Yeah, countries sometimes may or may not come back You look at like last time got Iceland, Iceland the whole country go bankrupt 10 years ago. But even so today come back again. Yeah, so don't worry so much on the country level, but individual stock you have to worry. It's possible for individual company to go bankrupt when you go to low optimism, assuming for example this is like a company, company if go to lowest, may not come back leh. It may go to zero, means the company can go bankrupt, but country cannot go bankrupt. Okay, especially with like Singapore with so much foreign reserve. Okay, yeah, so all those are come at the right time, to help the people. How about Dr. for Hong Kong medium term can trade already. So that's why midterm trading Singapore cannot make it, but Hong Kong can. You want to do trading, look for Hong Kong. Look for USA. USA also midterm also good for trading. But for short term, probably none of the country lah, unless you are talking about very short term, which is the last few weeks, which right now the signal kind of indicating those very short term trader may need to get out for time being. Right, so you see similarly that kind of a topish condition over here. So in fact the whole world they are connected for short term, mid term, long term as well. So that's why the COVID-19, right, connect the whole world together, so all this don't get too much. Okay, the next 1 2 months will become clearer. So in fact the so-called the mismatch between the stock market and the economy is just a short-term stock mismatch with the long-term so-called right perspective, or the mid-term, whichever. Yeah, so in fact the long-term is aligned quite well. Yeah, so that's why the stock market need more information. Stock market is forward-looking, right? Will not just look at the long-term one for the short term to react. You digest information today here. Today, wow, US say no, China no good, say want to probably do something, to probably to retaliate, whichever, right? Assuming then will quickly will fall down. One day up, then one day quickly will go up. Wow, because of the cases, got hope already. I think economy will restart. So that's why those are called noises, okay. Yeah, so that's why same as a daily virus condition, up down is very meaningless. You need to monitor at least within weeks, within like months. It's okay. Look at whether a higher low or whichever, which right now I'll say based on that, that is not good news, right? We have not seen a higher high so far, a bit weak, not just for Hong Kong, but for most of countries. Okay, same thing for the China, at the lower optimism but recovering quite well. The leader in the recovery, PMI already recovered already, not to mention right now stock, getting more bullish, right? So that's why this tail, not just follow the whole world, but its own country is getting better. You see, this compare Hong Kong a bit different. Hong Kong just now a little bit of double top. This way is almost like quite consistent go up. So that's why if you are a very short-term trader, you want to trade China, stocks probably possible nowadays. Singapore can also trade on the China side, but a bit careful don't go and buy those lousy, as cheap, or those questionable stocks. So got chance next time Dr. T will show you how to buy like H share, China stock listed in Hong Kong, through the free course. Okay, we continue right from here. So, but Dr. you say how to come up with a strategy to combine all this together, right? Let me show you. Okay. Dr. talk a bit too much already, but it's good for you, I actually only intended to talk for 1 hour. But do you know what time is it right now? My time right now is already 3 a.m. Right. Just now I start talking around one plus. Right. So a bit tiring now, but I'll at least complete this important section. Why? Because you belong to two groups. Could be the Kiasu group, missing the boat. Hey, Dr. T, if I don't buy now, later on rebound, V-shaped recovery, then normal already. Kiasu one. Another one is called Kiasi. Hey, Dr. T, even Warren Buffett, sell stock already. If I buy later on, my stock later on go to Great Depression, how? Then my company go bankrupt, then I'll lose everything, how? This is called Kiasi. Right, Kiasu and Kiasi literally means afraid of missing opportunity, afraid of losing money. Okay, so let's see these two groups, how to align. So this is one important strategy. Right? I want you to pay attention even after this course over. I want you to probably come to this page again to spend at least 10 minutes to read through one more time to make sure you fully understand. All right, firstly, let me explain this quadrant here. The price falling down, let's say this is like global financial crisis, whichever, or the last COVID-19 crisis in the last few months. So initially when fall down, right, those traders can do shorting in this quadrant. But when it comes to very low optimism, this low optimism, assuming this line here, right, they can apply a dividend so-called strategy, because this is called contrarian. Means they know, yes, likely they buy low will get lower, but they don't know where's the bottom. No one will know the bottom one, but they know it's low enough already. So they can apply an average down technique. Means whenever it's low enough, they buy, buy, buy. All right, but you need certain strategy, which I elaborate further. All right, so dividend giant stocks, not any dividend stock, not any REIT. It must be a giant REIT, must be a giant dividend stock, right? Can help you to overcome this period. Whether this is just 3 months, whether this is 3 years, it can support you, okay? And guess what? Your bank only can pay you 1% interest rate. If you so kia see, put your money in bank, every year only collect 1% interest rate. Yes, you're safe. But what if you treat the stock market as your bank? Okay, can you park in a bank called stock market, getting more than 1%? You could, right? Nowadays, even dividend stock already shoot up, like maybe minimum is a 5%, 6%, even some got 10%, also quite strong. Even they cannot pay a full dividend, you cut by half. I'll say get 3% to 5% is still very achievable, unless something no one expect for the 100 years, even worse than the Great Depression 1929. Let's say the COVID-19 become even stronger. The whole world in the next 3 years cannot get out. Okay, in that case, again, I cannot foresee that. I would say it's possible, but may not be very likely. But we can prepare for that. All right, I'll show you how. So the number one protector is called dividend giants. Second protector is called growth giant. Those company, right, business is growing, right, very strong in business. Even COVID-19 period still making money, unlike airline stocks. So this is a second protection. If you can buy that kind of stocks, even they don't pay you dividend, right? That kind of stocks do not easily go bankrupt. Okay. Of course, if the 100 years of crisis, who knows, one day they may go bankrupt, but they will be the almost the last 5% of the business, right, to end up in such a so-called crisis. Okay, of course, if one day when crisis is over, right, no more low optimism, then you can apply another so-called strategy. Instead of average down, you can average up. Means when it becomes stronger, you can buy high. Initially you buy low, then buy high, then a bit buy higher. Okay, means you use a momentum, right, to actually, but you must get out using the right strategy, because average up looks like very attractive, but it's not easy. This is more on the trading, especially on momentum trading strategy. Average down, this is using contrarian investing. This is average down using so-called growth investing. So this downtrend, this is uptrend, and this is more for trading side, and this for shorting. So these are the 4 quadrants for 4 different personalities. Okay, Dr. T have at least 10 different strategies. Okay, this is just a 4 out of Dr. T 10 strategies. Okay, I'm very sure at least one of them could fit you. I'll say right now, one of safest will be either dividend or growth stock at low optimism. And in fact, dividend, this is one of the strongest, even safer than growth, right? Because growth stock, if even the company can make money, but at low optimism, right? Unless the share price can go up, otherwise, you may not get dividend. Okay, because many growth stock actually pay you very little dividend, either 1% or even lower. Even sometimes they pay you 0%. Okay, let me explain the strategy. The strategy is you must take the action first. For example, you see a low optimism, could be $1, $10, whichever stock. When you see, but it must be a giant first. These are the conditions. They don't read through. Investing a portfolio of 10 to 20 giant stock. If you don't know what's the Dr. T giant criteria, I have a 7-hour online course which you can attend. Okay, not enough, you can read Dr. T over 1,000 articles, many case studies. Okay, at the same time, diversify to 3 different sectors, 3 different countries, balance between the dividend giant and the growth giant. Okay, let's say probably 5 each, or 10 each, and using multiple entries. For example, you got 10,000, don't go 10,000 all go in, probably 1,000 first, and then another 1,000. Is it okay? Something like that. All right, either split to 10 times or split to 5 times or split to 2 times. Of course, you want one time go in, nothing wrong, but then you must be knowing what you are doing lah. Okay, so it means since we don't know where's the market bottom, for example, we could be here. For example, we could be here lah. For example, oh, Dr. T, V-shaped recovery, later on it may fall down even deeper. Or we could be right here, we won't know. Only when history is over one day, oh, actually, Dr. T, we are here. A lot of people didn't know. Actually, the worst was here, the 23rd of March. No, Dr. T, actually, we are here. The 23rd of March was here. So, in fact, later on, it can fall down another 2 years. Whether it's here or here, it doesn't matter, because this strategy, right, would help you. How? Number one, when you see this line, the low optimism line, right, means less than 25%, right, it can be 0 or 25, doesn't matter. Okay, this require you master Dr. T optimism strategy. I got 55 styles. Optimism is just one of my 55 styles. Then the giant is one of my 55 style as well. So you need to master at least these two out of my 55 style. The giant criteria plus the optimism. Then that is the minimum 2 star for you to starting from here. All right. So what you need to do, all right, you need to trigger the first one first. A lot of people not able to do that. The Kia C1, okay, probably can go in first. But the Kia C1 cannot. Kia C, they want to wait. Dr. T, enter here later, I lose money, I dare not. So assuming if the market right now is here, you know what may happen, right? So the market, if the market is here, guess what? They say they want to wait to buy at here, but assuming it never fall down to here, right? It go up here, you know what they'll do? They'll say, here I never buy, here definitely I'll never buy. And they'll wait for another 5 to 10 years for it to fall down. And guess what? Next time the 10 years low will never fall down to here again. It may fall down to here somewhere. Do you get it? Because we got always a higher low. Okay, and at the same time, assuming it really fall down, assuming the person who don't buy is correct. I tell you lor, luckily I never go and listen, say go and buy. You see, now really fall down. Are you sure they are the one who make a lot of money? No. Here they never buy means that they are someone afraid of losing money. When they're here, they also don't know where's the bottom. When they're here, actually bottom, but they also don't know where's the bottom. Guess what? When market rate recover to here, then they look back, hey, here's low. No, I want to wait to buy low here. And guess what? It never go to low. And this round will never come back again. So that's why, remember, this is a beginner mistake. Always want to buy the lowest. Yes, it's not wrong to say economy may have more bearish to point to come. Yes, the potential Great Depression may come, but you never know, right? You simply think you fall down, and just because of that, you don't have a plan. Every time you see, you're afraid you go lower and lower, and at the end you don't have a low to anchor. So that's why the first entry was set an anchor point. This is important. You may not buy the lowest. By the way, the first entry may not always be here. Some people, the first entry may be here, low optimism. Some may be at here, lucky one, but they never know. Even they enter here, they assume it may fall down. But the key is you must always, shoot your first bullet. You got 10 bullets, never shoot. When the party is over, your 10 bullets still with you in your bank, enjoying 1% interest rate. Guess what? In fact, you cannot take action to buy, you cannot take action to short. At the end, as an observer, when the party is over, when crisis is over, which is you never know when it is. Because a crisis only when everything is over, oh, this is the crisis time. At that time, we will know whether 23rd of March was the lowest, or maybe what 2020 was the lowest, will be the lowest. No one knows. But if you do not have a strategy, don't have an anchor point, right? No matter how low it goes, you could never enjoy it. Okay, again, whoever able to listen to here, I want you to rewind this video. You can easily skip this video because simply because it's free. But remember, Dr. T right now, I stay until 3 a.m. my time right now. I'm sincere to help you, right? But if you treat this talk here as if another entertainment so-called talk, this could be your biggest mistake ever, right? I'm willing to share all this with you, right? I won't say this is my so-called best strategy, right? It's one of my strategy, or can I say a few of my strategies. But I sympathize a lot of people, either buyer or seller, they don't know what to do, right? If today you do not take this seriously, right, you may miss one opportunity, right? Even you think, oh, I tell you, no, you'll fall down further. I tell you, no, you'll go up further, right? But you never have this kind of a giant protect you. You could be in trouble. For example, you buy so-called dividend stock, give you more than 10% dividend yield, but it paid dividend last year, but probably this year totally cannot pay. You look at the bank, the famous famous HSBC bank, the largest bank in Hong Kong. It tells you this quarter cannot pay anymore. Why? The last few decades, every quarter can pay, but this quarter cannot pay. Yeah, so don't assume a dividend stock must be good. All right, it must be a dividend giant aligned to Dr. T criteria. If you don't know, right, later on I have an option for you. All right, you can learn from the 7-hour course. Okay, these are the effort you need to put in to learn, huh? Yeah, you can spend over 10 years to exchange for a certificate to get a job, right? Why you cannot spend 7 hours to learn a skill to help yourself? Okay, and at the same time, right, you apply this technique, assuming Dr. T, this is not a worst, assuming we are here lah, right? Assuming we are here, right? Because we never know, right? Because those so-called kia C, kia C type, they're afraid, Okay, in that case, right? Assuming you enter here, right? Assuming yes, wow, they're right, 2021 get worse, and then 2022 even worse. Alright, guess what? You apply a progressive entry. Let's say got 10,000, right? You enter 1,000, 1,000, 1,000, or 2,000, 2,000, 2,000. Okay, every time there are two techniques. One is called linear method, one is called non-linear. Linear, every time once you trigger your first one as your anchor, your benchmark, your next one must be 25% lower. You see, times 0.75 times 0.5, every time is 0.25, 0.25 lower. Do you get it? Okay, so it means even the crisis worse than Great Depression ever. Let's say your SDI dropped to only 5% of value of current one. So what you need to do, of course you cannot buy at zero lah. At that time the world go bankrupt already. So at the number very low to zero, I put a 5%. If this is A, this is a 0.05 of A. So you take the 1.75, you add up all these 5 together, divided by 5, the average number is 0.51. It means even the worst crisis ever, means the human history, no one experienced before, really come. Okay, even SDI from, let's say, 5%, 1,000 points, 5% means 50 points. So 2,000 means around 100 points. So it means SDI from over 2,500 points can, let's say, drop to roughly maybe 150 points, assuming. I'm not saying you'll drop to there lah. I say if that no one could predict happens, even you go through that, you just make sure every time the SDI drop 25%, you buy. Every time the Hang Seng drop 25%, but don't anyhow drop 1 point you buy, must drop by 25% every time. Okay, by doing so, you are getting an average of close to 50% here. You get it? So for example, SDI 2,500 points, almost you get it at the 1,250. Yes, 1,250 is not at $1, but is it low? It's low enough already, right? You cannot buy it here, and you don't have to buy it here only. Through the averaging, in fact, you're buying at average price here. Do you get it? And in fact, you don't need to average down. You also can average up. For example, here you don't buy, here don't buy, here don't buy. One day you wake up, hey, how can STI really worth 200 points? Almost impossible. I cannot believe it. Assuming that they almost no one can imagine that may happen. If it happen, you can press a button. Don't worry, right? Even you press a button, you can average up. Okay, yeah. So of course, I think we go to a more practical case, huh? Okay, a more practical case. Let's say we go to a stock ABC. Let's say the stock ABC is $20. Hey, quite a few stocks are $20. For example, like your DBS could be near to $20. Your Malaysia giant stock public bank could be near to $20, right? So you use that $20, for example, okay, $20 is just an example, huh? Right? Remember, everything I quote is an example. You use A or B better, huh? $20, the 25%, 15. So your DBS 20, 15, 10, 5, or even DBS drop $1. So what does it mean? It means $20 is a small durian. $15 slightly bigger durian. $10 a big durian. Hey, you thought $10 not possible? The 1997 Asian financial crisis, the 203, the SARS, 208, 209 subprime crisis all dropped to $10 before. Assuming worse than that, $5 come. Okay, and people queue out in front of DBS want to withdraw money, and even the world 90% bank all go bankrupt already. Only left a few banks in the world still have not go bankrupt. Assuming DBS dropped to $1, right? I know I'm going a bit extreme, but if not because of extreme, how can I convince those most conservative investors to take action? Just because you're scary should not stop you from investing. You can use this way to protect you, right? So in fact, this DBS also got around probably 6% dividend. Assuming DBS cannot pay full 6% dividend, right? Cut by half, pay you 3% dividend, good enough or not, right? So Dr. Gun already here. I put my money in bank, assuming Great Depression, 3 years, 5 years, probably the interest rate will drop to nearly zero, and that is the worst. And I probably the job may be insecure. Okay, better. And I don't just buy one giant bank. I will divide to 10 to 20 giants, one giant bank, one giant healthcare, one giant REIT, one giant technology stock, one giant F&B. Do you get what I'm saying? And don't buy everything same country. One buy one country Singapore, one buy country Hong Kong, one buy country USA, one buy country Malaysia. Okay, so but Dr. T, what if the whole world go bankrupt? If whole world go bankrupt, then stock market also it means everything zero zero already lah. Singapore zero, Hong Kong zero. In that case, stock market no longer important lah. Okay, so I'm not saying that may happen. I'm just saying don't be so pessimistic the sky will fall down. Okay, in the human history until now sky has not fall down yet. Okay, I'm hoping you still need to have at least 1% of that optimism. Is it okay? Don't everything think of zero zero all the way. All right, because when you're too pessimistic, you put your money in bank. If go bankrupt, the bank could go bankrupt. Your cash deposit in bank also insecure. Bank the most can only pay you 75,000 compensation according to law. So that's why learn to protect your wealth through the stock market, okay, and through diversification over 10 to 20 giant stocks over multiple entries, divided between dividend giants and growth giants. Okay, the second technique is even more conservative. Linear method probably not enough. This conservative investor say not enough. Okay, I want every time must cut by half. Like the DBS $20, I'll skip this one. I'll DBS the next round. I'll quickly go to $10, and after that, $10 must drop to $5 only I can consider, and then after that $5 drop to 2.5. You get it? Every time must be cut by half, 0.5, 0.25, 0.125. So if you assuming all the 5 experience, right, you take everything here, divide by 5, the average is 38% of here. So it means this is not just half. If you use the so-called half method. Every time is entered by half, your average over here is around 38%, which is actually as if like you buy everything at the 38%. So that's why this technique, the beauty is you do know where is the lowest, but you do not need to, but you just need to consistently follow this technique, either the linear method or the non-linear method, to just buy in this manner. Okay, it can give you either 38% average or the 50% average, not the lowest, but already this is already low enough already. This is even below here. Don't be too greedy lah to buy the lowest. If you do so, unfortunately, you may miss the boat as well. Yeah, so that's why heaven is fair lah, huh? So reward those who can take minimum calculated risk. Right, this technique is already quite safe, but understand it may not be for everyone. Whoever not able to press the first button, unfortunately, you are never able to press the button along the way because you never know where's the lowest. Even at here, you also thought you'll fall down again. So forever, every time you see, wow, everything around me is the enemy. Okay, so that's why this the technique help you to remove the fear. And how it protect you? Number one, it's through the growth and dividend giant to protect you. Right? They have strong business will protect you, but not just one. Through 10 to 20. Okay, I'm not saying go for go for DBS. I just anyhow quote one. Who knows DBS not a giant? Whether it's a giant or not, you have to read my 1,000 blog articles. Who knows, from there you can collect 10 or 20. In fact, the whole world has roughly 1,500 giant stocks. Okay, but the strongest one is roughly 100. Those are super giants. So if you can buy super giant, those are very good one, huh? But I'll say at least read the normal giant first. Okay. For example, you can use the $8 share price using half method to $4. I assuming you want to cut further, Doctor normal already. Assuming this is Vicom. Vicom, let's say before the stocks split, okay. You remember Vicom around $8, right? Assuming $8 you buy one time, and then the $4, assuming you buy second time. I know so far you have not seen that, unless probably 10 years ago you can drop to $4. But assuming there's a crisis no one believe may happen, even stock like Vicom, it may drop to $4. And then because you are conservative, so after you entering one here, then let's say you got 10,000, you enter 1,000 here, no one can touch your second 1,000 until here. But if you don't use this technique, you think $8 must fall down, assuming don't even fall, they say it must drop to $6 to go in. Assuming what if never fall to $6? Assuming $8 is probably or $7 the lowest, unfortunately, you may totally miss the boat. Do you get it? So that's why the whole thing, you must be able to take the first action first. The first action not necessary along this line. You could be this line doesn't matter. It must be between 0 to 25% optimism. Of course, the bonus is lower, but don't buy the lowest ever. There must be a reason why a stock price can be a 0% optimism. Okay, it could be some sort of a value trap. Right, optimism is just 1/55 style. You must combine with the giant. Make sure it's a giant and low optimism. Okay, and if you combine with Dr. T other 53 styles like technical analysis, macroeconomy, and the rest, that will even better, Okay, yeah. For this case, you average 2. This case average 3. So average 3, 20, 15, 10. The average is 15. Average of 2, 8 plus 4, divide by 2, you get 6. Do you get what I'm saying here? Okay. Again, I spent quite a lot of time in this slide. Okay. But I want you later on, after finish the whole course here, I'll keep this video over here. If too tiring for you today, please come back again, save the video because it's so important for you. Also recommend your friends, to listen to this talk here. It can save them, right, from the fear or the greed. Because the kiasu and kiasi, these are the two human instincts. But through this strategy, the defensive strategy can help you. Dr. T, what if the crisis is over? Next time I'll teach you how to average up. So now we are either at here or at here, but you don't need to guess. Okay, so we will use this technique to take advantage of here. Okay, whether it could be just a one time over here, right, it never come back, or it could be here, let you have multiple chance to fully leverage on your capital, also fine. You no need to think or no need to guess, no need to have a crystal ball to see the future, but you must know what are the giant stocks in the world. You must know how to diversify to 10 to 20 giant stocks. You must know how to, perform the optimism analysis. You must know the Kiasu and Kiasi technique, something like that. Do you get it? And more importantly, you must overcome your biggest enemy, who is yourself. Okay, all right, so much on that. We continue. All right, Dr. T, may I know how to continue learning? I'm so excited until here. Thank you so much. At first you only want to talk for 1 hour, looks like you nearly talk for 2 hours so far. Okay, I will continue to guide you. All right, you can go to my website, download the 2 ebooks. All right, even this ebook was written like a few months ago. I already can, at the time, I'm not a fortune teller, but at the time at high optimism, I tell you be careful already. Huh? So you worth it for you to read through, and both of them you can download within 1 minute, free for both ebooks, including the top 10 so-called dream team stock. Of course, this is top 10, not necessarily the top lah. All right, I just take any 10 out of 1,500. All right, that's what means they are the best of the 10. It's just a sample portfolio, but they are giants, huh? Okay, but may not be all the giants suitable to buy now. Okay, because that was written right a few months ago. Right, situation could change, so every month you could review. Is it still a giant? Huh? A giant may not be forever a giant. Right, so usually every quarter we must review one time. Huh? Okay, but Doctor, assuming I read the 2 books, probably one day I can finish all already. What else can I do? Okay, you can join Dr. T forum. Okay, click join. So this one got the daily discussion, right? So you can in the life journey for investment, Dr. T will review lah. Okay, so every day I will discuss on various investment topics, huh? Yeah, because here the video probably the most you can listen is like once a month. But in this forum, you can get to see Dr. T right every day, huh? But please contribute at least with comments or click a like over there. It's okay. Right, so much on that, and make sure when you click a join, please type Dr. T lucky number 55, so that I know that you're the readers from this video here. So I'll give you permission to join, because this is a private group, not anyone can join. A lot of time I will reject them because they may be hackers, okay, or they want to do commercial inside. Okay, I do not like that. I like sincere, right? These so-called learners. Okay, whoever want to learn the investment education, right, can join over here. Okay, and not enough, Dr. T. After I finish the books, then I'll give you a free 4-hour course to learn 10 strategies. Okay, how to buy low, sell high, take care of the macroeconomy, right? Even learn the Temasek strategy, the Cushing strategy, Warren Buffett strategy, how to do shorting, okay, how to invest in dividend stocks, including REITs, what are the giant REITs, how to do spring cleaning, how to time for global financial crisis, what to buy, when to buy, how much to buy, okay, when to sell, fundamental, technical, personal analysis, optimism, and much more. I got 55 styles. Probably here you can learn at least 5 styles. Okay, and more latest market outlook. Usually every month I have a free course, but not need to come every month. You just need to come 1 month. Because I'm only conducting in Singapore. If you are in overseas, you can join my online course. If you are in Singapore, right, we'll wait for the government announcement, right? So for sure, there'll be 1 month, right? Economy will restart. Okay. So far, the opening is for the June, right? But here, as long as you come to my website, ein55.com, even June not available, we got July. Assuming gathering not allowed in June, we got July, we got August. For sure, one day will be open. Okay, I'm not worrying on that, huh? But Dr. T, this is the 4 hours on the 10 strategy mentioned over here. Thank you so much. But what if, because I learned the most is probably a few styles, but I want to learn all your 55 styles, all your knowledge, your brain over here. your 20 years experience because I cannot wait further. I'm so excited because you mentioned this is every 10 years opportunity. I want to learn as much as possible in the shortest time. Okay, then you can contact Dr. T by email. But this one no spamming. Just email Dr. T at this Gmail here, or refer to my website for the 6-day course information. You're interested to know the cost, how much it costs for the 6 day. Okay, I can hint to you lah. Okay, if whichever course you can find in Singapore, you think high quality one, this likely one of the lowest, if not the lowest. Can I put that? But I don't like to call the lowest cost. I like to say the most undervalued. Okay, my course is a giant. I don't mind to let you learn for free in this 1 hour, learn for free for 4 hours, and learn at the one of the lowest cost in the whole Singapore. Also doesn't matter. Okay, but I want you to overcome your so-called yourself to start the learning from here. Don't wait first. Okay, who knows here, Dr. T course, the queue could be long, right? So you can contact me ASAP if you want to, okay. And the 4 hour course, register online first, share with your friends. Okay, if the June 1 gearing not possible, I will actually offer you so-called the webinar version, not to worry, yeah. So I will not let you wait for too long. Okay, in case you view this video a few months, or who knows, right now no more COVID-19, but my video will be here for years. One day you listen to here, who knows, now it's 2021, now it's 2022. Don't worry, Dr. T, the course is still there. You can still contact me, I'll be with you, But Dr. T, I cannot wait for too long. I want tonight, I want today to learn already, start learning from now. No more waiting. Can you do that? Okay, I got 7 hours online course. This is a new course I just updated. Previously was just a 2 hour course, online one. Okay, it's a low cost pay course, but it's very, very, later I'll show you the price. You'll laugh at it, Okay, why I decided to do something, because during the COVID-19, during lockdown, Dr. T had more time, and I see many people suffering, and I see how come they don't know how to invest. So I use the time, I spent over 100 hours to prepare the material, and I start preparing this 7 hours, 9 module course, right? Covering 8 countries, how many countries? 8 exchanges, okay, because USA got 2 exchanges, 8 exchanges over 7 countries. So if you see your country flag, it means the giant stocks from your country will be covered here. There'll be over 100 giants will be covered. Okay, although the whole world got 1,500 giants according to Dr. T criteria, here you learn how to fish. Okay, and Dr. T got the English version and Chinese version. Each one is 7 hours. Okay, so that's why even language is no longer a barrier. And what you'll learn the value investing strategy, which is one of Dr. T 55 styles. So Dr. T got many 55 styles. Optimism is one style. Okay, just now was just an introduction. So this 7 hour online course, you'll learn Dr. T 1 style on value investing. You learn how to do dividend investing, and also do capital gains through growth stock and other value stock. And dividend will divide to REITs and non-REITs. So these 4 strategies you'll learn in one go, right? Using value investing principle. And this is not $1,000. Okay, I'll let you know the price very soon. And you don't need to become accountant, but you master the 3 financial statement: income statement, balance sheet, and cash flow statement, through 11 critical parameters. Hey, no need to learn in a painful way. I'll teach you the easiest way. No need to become accountant, right? But you need to complete this 7 hour course. No need 4 years degree on accounting, but just 7 hours. Master this 11 criteria, then you can look for those giants in the whole world. Okay, and this is very important criteria. Okay, because remember, just I'm talking about the giants. This is one of the precondition before you can buy low, sell high. Okay, others, Dr. will teach you how to do stock screening. Okay, so in fact, even your country is not covered here. Dr. T, I'm from China. Dr. T, I'm from Taiwan. I'm from Europe. Doesn't matter. Okay, because I'll give you 5 free screeners. In fact, a few of them can even screen for the whole world 100 stock exchanges for free. Apply Dr. T strategies. I'm not giving you just a features. Of course, if you say, Dr. T, I'm so tired, I just want to listen 7 hours, then copy everything. Okay, assuming you don't like to do practical, I got practical session for you to do hands-on. Of course, whether you will do it or not, I cannot control you because I cannot get to monitor you. But I will assume you'll do that because it's for your own good. But even you don't do practical, just my over 100 on my sample, probably already more than sufficient for you. Maybe, who knows, 20, 30 from USA, maybe 20, 30 from Singapore. In fact, it's strictly speaking, is more than 100. I did not count exactly. I just say at least 100. And quite many of them with detailed case studies. Means I'll elaborate further. Even I'll talk for like 5 minutes, 10 minutes in more details. With a few of them are very advanced strategies, not just on beginner. Although this 7-hour course I target for both beginners and intermediate learners. Okay, but even I build in a few advanced strategies inside. Okay, yeah. So there's no overlapping with the earlier course. Okay, but of course the common one, like this certain concept, like important must look for a giant fall down, right? All these are still important. Okay, so please start the learning from today, which is important. But Dr. T, please don't charge me $1,000. I'm very sincere. You see, you talk for 2 hours right now. Your time right now is 2:30 a.m. Singapore time. Yeah, but Dr. T, can you give me a good price? Uh, Good news for you. It's only $100. Okay, but frank speaking, I think $100 compared with my 100 hours put in. You only pay me $1 for 1 hour. Okay, because 7 hours is the time I talk. But the 100 hours is the time I spend. Okay, I don't even want you to pay $1 per hour. Now I just request you. Oh, by the way, you can go to my website here, yan55.com/online to register for this 7 hours. Earlier on, the 4 hours course, the one is a meetup. Okay, that one is free, but the learning is different. The learning is 10 strategies. This learning is focusing on the giants. Okay, and through this website here, and I know you to spend $100 because I know some of you is very tight even during the pandemic, this crisis. But my course need to actually host online, and this platform is not owned by Dr. T. When you connected with a platform, so I seek your understanding. I need to charge some minimum to maintain the online course. Okay, so this fee is something unbelievable. This is a gift for you, for every one of you. There's a new launch special because Dr. T just enhances cost to 7 hours. Okay, so this is a 75% discount, $25. You pay $25, you get 100 hours of my effort. You get 7 hours of the cost. You just take 7 hours, divide by $25. That is almost equal to 1 hour. You pay me $3.50. How much is $3.50, Dr. T? I can go dabao, just buy one this so-called lunch package bag. It's also $3.50. Today, you can just simply ignore it, or you can learn the wonderful knowledge, right, which can help you immediately. It means after you pay online $25, this can use credit card to pay online, everything very safe one, and then you can start learning online. Okay, after you make the payment, as simple as that. Okay, and at the same time, these are the bonuses for you. Number one, after you pay $25, it's not for you only. Your whole family members can learn because you're staying together, right? One account you can share for all. Hey, you go and learn those, the meetup. It's just you have to pay for one person. But this one, you pay one person, your whole family got 4-5% all can learn for free. Especially some of your family members are the young one, they are teenagers. Tell them, all right. So in order to avoid the financial crisis, start learning from here. And number two, this is a permanent course. All right, thank you to the platform investing.com. because later on from here you connect to the investing.com when you sign up either for the English course or the Chinese course. Okay, the content is almost identical. All right, you can attend one. All right, difference is around 5 to 10% because my verbal examples could be different. If you want to learn the complete one, then you can actually learn both languages if you're bilingual. Huh? Okay, and permanent reference. It means today you learn. After 1 year later, you also can learn. And number three, you got free upgrading. In fact, my earlier class was 2 hours, and just 1 month ago, I upgrade to 7 hours. Whoever 2 years ago pay for 2 hours one, now they get free upgrading. Now this course, for example, you pay 2 hours, no, you pay 7 hours. The earlier 2 hours I still keep inside for the English version because previously my 2 hours for English version. The Chinese one is just this time is the first round, but the content is identical. And you can get the free two ebooks. Full two free ebooks, you can go to my here download directly lah. No need to wait until here. And you can combine the 7 hours online course with the 4 hours early on the meetup course. Okay, one focusing on giants, one focusing on the clock TikTok when to buy and sell. Okay, this is learning one style. This is learning another one style. Okay, so after that, if you learn one style plus one style, if you think Dr. T is very sincere, you can learn remaining 53 styles from Dr. T. I'm willing to teach you complete 55 styles, and definitely I'll give you another good surprise. Okay, when we have chance to meet again. All right. If not, you can also email Dr. T. Just now, remember Dr. T email. All right, and yeah, remember, all right, either follow the ein55.com/online here, or later on my YouTube below. I'll give you a link. You just click on it. You can connect to there as well. Okay, so this is actually, I won't say a lifetime opportunity, but this cost is too low. To pay for $25 to give you this almost like unlimited opportunity, not only for you, even for your whole family members. So I'll say this is not a difficult decision to make. Please take your action now. Okay. With that, this is Dr. T. Thank you so much for staying until here. In fact, Dr. T, this is an English course. I'm going to spend another 1-2 hours to talk on the Chinese version now. Okay. Okay. With that, let's stay contact. All right. Thank you very much. Hope to see you. Okay. Bye bye.